Whether you're an avid property investor or about to buy your first property, why do it alone when you could partner with Australia's best buyer's agent? Director of Pure Property Investment, Property Investment Professionals of Australia board member and REB Buyer's Agent of the Year, Paul Glossop, can take your portfolio to the next level. Get in touch today to discuss your investment goals. Get one-on-one insight from Paul Glossop. And for the first 100 people, this service is completely free. Head to purepropertyinvestment.com today to schedule your consult with Paul Glossop directly.
Welcome to the Smart Property Investment Show with your host, Phil Tarrant.
Okay, everyone, how are you going? Welcome to the podcast today, and it's always a privilege for us to bring champions onto the podcast, those exceeding and doing well across property investing and also the business of property investing and property in Australia. We're very fortunate that we have such a vibrant real estate community here. In the studio with me today is a gentleman by the name of Arjun Paliwal. You might remember the name. I've had him on the podcast a couple of times beforehand talking about his investment journey. He's come back to give us a bit of an update of what's going on and what he's been up to, and we're going to hear all about that. But most recently, Arjun was the Real Estate Business REB 2020 for the REB Awards winner, Rising Star of the Year. What's all that about, Arjun? What did you do to win that?
Oh, mate, not too sure. I asked myself that same question as well. Happy clients and a good team around me. I think that's where it all comes down to at the end of the day.
So can you remind everyone what you do for a living? You're a buyer's agent, aren't you?
That's right. So I'm a property researcher and buyer's agent, and I run Investikit as the buyer's agency, and I've been doing that for a couple of years now.
That's cool. I remember when we first got together many years ago, we spoke about you as a property investor, and then you've made this transition into being a buyer's agent. So turning your passion for property into a profession, and we'll get you back in at some point. We'll have a bit of a chat about how you're going with that. But the purpose of our discussion today, Arjun, is very much around updating us on your property journey. Arjun, as a property investor, that's what kicked off into your career in property, but you haven't given up investing in property. What's happening there? Give us a sense of the portfolio now, and I hear you just bought something new.
Yeah, so in terms of a bit of an update, just purchased the 11th property smack bang in the middle of lockdowns. And the story is an interesting one. It was my first venture personally into the regional Victoria, city of Bendigo, and helped me just continue diversifying, which has been a big goal of mine. What started with my first purchase in Sydney, then went to 3 more in Brisbane, then went to 4 in Tassie, then a commercial in Victoria before heading overseas for one, and then coming back to Victoria again. So just that spread was quite important as part of that sort of diversifying journey. But what was something I didn't expect was purchasing right in the heart of lockdowns for COVID.
Yeah, and a lot of people are struggling with this right now. So just to confirm, this is your 11th purchase, is that right?
That's right.
Okay, great. So your first October 2018 by memory, the first episode that you were on Smart Property Investment, October 18, at that point in time, 9 properties. You just left your job, and by memory, you're at a bank, Commonwealth Bank. Did I get that right?
That's right.
That's right. Some young gun, some young hotshot in one of the branches. I can't remember which one it was. And then a couple of episodes in 2019, you purchased your 10th property, which was in a self-managed super fund, and we had a chat about that. But then you embarked on this journey of becoming a buyer's agent. So this is number 11, smack bang in the middle of lockdown. How are you going sort of securing money, mate, considering that your business is relatively new? You're winning awards and stuff with the REB Awards, so you must be doing something right. Has that been a challenge in you securing finance?
Yeah, so the first year in terms of full financial year was, a big part in terms of that building of income as the business progressed. But really what I couldn't make up in finance, I had to make up in deposit. So for this particular purchase, it was a pretty intensive money down in terms of about 25 to 30% down on the deal. And so as a result, that's sort of a good sign to say that the banks are starting to, tighten up for sure on the portfolio. But it just means that instead of having no purchase, I just had to put more money down on the deal.
So what sort of LVR did you have to go in at?
By memory, it was just under 75, so close to 70, around 72%, 73% is what I had to go into, which is healthy because it has its benefits. While you've got a high deposit amount to have to put together, the cash flow is the benefit on the other side where, during times of, you're purchasing right in the middle of lockdown, to have that cash flow, it helps a lot.
So had you identified this property prior to COVID, or this was during COVID, you went, oh, hang on a second, I'm actually going to go and get something. What point of the timing did it all happen?
Yeah, so this is a very interesting backstory. Basically, to go back a couple steps, I had no intentions to purchase property for myself, get lending for the first couple of years in business. I think you're trying to find your feet. The banks are trying to find what you're getting up to and all that sort of stuff. And so what I had some pretty good success with was, though, back in 2018, we'd purchased a fair amount of properties for client in Ballarat. And so I was excited from the point of Ballarat was a great market and we had double-digit growth year on year for many of those purchases. But when you miss out personally, you're like, damn it, I wish I'd started the business many years ago so I could, purchase something for myself in Ballarat. Then all of a sudden time flies around and I kind of see Bendigo, showing the same sort of signals as Ballarat did back in 2018, except instead of a very, very hot market, it's more like a sizzle, just that increase in certain indicators that were showing. And so this particular property I ended up purchasing, I actually presented it to a client. And so a client of mine, COVID lockdown hit, their business just was flipped down, upside down completely. And in their fairness, they had to drop out of the deal. Fortunately, we had finance clause. The agent's like, what's happened here? And the client actually had to back out from finance. Then, what was the next right thing to do was present it to the next client. And that next client had a similar borrowing capacity thing come up. Banks just weren't too sure on how they're going to give out that money. And again, that came up for that customer. So then, something starts happening internally where I'm like, this is a sign. Like, one thing's missed out here, second thing's missed out here. I really do believe in the market, believe in that property. And I missed out on that Ballarat for myself, didn't for my clients. And then that's when this Bendigo thought came up again. So I had no pre-approval, nothing. I had a relationship with the agent who had obviously, we'd worked with to secure that property for the customer. And I said, if you can just give me a bit of time, I can work on what I can do with pre-approval, see how it goes. I can't guarantee anything. Like 2 clients have missed out here. I don't want to miss out on this property. And so he had a very good relationship with the vendor and was able to put me in a position to have that time. I went and put all my docs together. My wife was a huge helping hand with that one. We had to drop everything. And then that's how that purchase came about. So it was just really about, I truly believed in that asset, whether it was in the smack bang in the middle of lockdown or not. It was about that long-term fundamentals. And we entered into that property and purchased it.
So let's have a chat about those fundamentals. So you said that you were in Ballarat buying up prior. You feel as though you missed the mark because you weren't an ability to secure finance in, and then you saw the same in Bendigo. Let's get into that, but we'll go to a break beforehand. Back in a moment. Welcome back, everyone. Phil Tarrant, host of the Smart Property Investment Show with Arjun Paliwal, winner, Rising Star of the Year at the 2020 REB Awards. Arjun, so the REB Awards is part of real estate business, which is part of Momentum Media, as is Smart Property Investment, so all part of the same family. I was at the awards, giving away some awards to the winners in my role here at Momentum Media as executive editor. If I remember correctly, you went there to receive your award. I remember sitting there going, Arjun, where is he? I was like, oh, yeah, I want to see him up on screen.
Had a bit of a connection drop out. So the funny thing is my wife took a video of me watching myself on that live screen getting the award. So I was like, okay, they're going to ask me to say something. And then it's like connection dropped out. And I had a smile on my face because my wife was still recording me. But inside I was like, hey, hold on a minute. Am I going to jump on now? Do I say something? Do I don't? So that was that experience there.
Mate, I was really disappointed. I was like, oh, when I heard your name called out, I went, oh, that's pretty cool. I know Arjun, and nothing else. I thought you were too busy doing something else. You weren't interested, mate.
No, I was definitely interested. My wife captured the moment, and it was a special moment with family for sure to celebrate that.
How did you find, just while I got you, how did you find that sort of awards experience at doing it as a live immersive broadcast dialed in and accepting live?
Yeah, it was actually very unique. It was very professionally put together. It felt like I was there because everyone was, rocking their suits, and the team and the camaraderie was still there. When it zoned into different people's organizations within one, you could see the genuine excitement still there. So I think usually I was thinking, hey, it's going to go online. You're going to miss that buzz. But everyone was really happy. Everyone was enjoying those successes. So that was good.
Now, let's have a discussion around it. Bendigo. So what do you like about Bendigo? And for our listeners who, aren't familiar with Bendigo, we'll have a discussion around that. But it's also some of the drivers and fundamentals of large regional towns. And there are some people who are huge advocates of regional locations, some less so. Arjun, I imagine you fit into the former. You like regional locations. WhyBendigo. What I know about Bendigo is a big defence manufacturer there, Talus. Is that correct?
Yeah, so Bendigo is very diverse when it comes to its employment with regards to, defense, retail, hospitality. You've got manufacturing in some parts as well as agriculture, like health with the new hospital. So it's such a diverse regional city. The word regional sometimes doesn't really fit some of these markets, because when someone thinks regional Australia, a lot of people assume straight away that the employment is not quite there, the job diversity isn't quite there. But that's just not the case with a city like Bendigo with over 100,000 people in that greater region. And you're within sort of 2 hours drive as well from Melbourne, as we know, a major capital city.
Yeah. So what were the fundamentals that really attract you other than a diversified economy, which is always an important part of any investment strategy, irrespective of where it is? What were you seeing? Why was it the right time to buy in Bendigo now? What's your thoughts in terms of price growth? What was the play? Was it more of a cash flow play for you? Was it a capital growth play? Considering that this is your 11th property, you must be getting pretty sophisticated in the different drivers or dynamics that you're using to balance that portfolio out.
Yeah, so starting from a very high level, Phil, we're sometimes surprised when we talk about certain regions experiencing population growth similar to our capital cities. So with Bendigo, many submarkets there were experiencing population growth upwards of 2% and close to 2%. And when you start thinking of where that sits on a per annum basis, that's very much near, the big Sydney. And when it comes to other fundamentals, obviously the hospital was just recently built there, 2018 going into 19. Other infrastructure was also happening around that time. But I guess just in terms of, the natural supply and demand indicators for me, like the suburb of Kennington, which I'd purchased in, it's seen over just the last 12 months a 25% drop in days on market for house sales. We've seen, rents as well over the last 12 months move up by over 6%. So you're just seeing a market where, including this odd period of COVID, shutdowns, uncertainty, places have been selling faster. There hasn't been a whole lot of discounting. Places have been renting for more. The stock's been reducing quite quickly. And median value as well, jumping over 7% over the last 12 months. It's been a pretty good story, especially when you start thinking house prices commonly found between 350 and 450 in that suburb. So, it's walking distance in some parts in terms of the property I purchased from the CBD. And it's just got a lot of exciting fundamentals from those micro data points to more of a big diversified city, a satellite location that's quite affordable in terms of its counterparts.
So give us some details, Arjun, on the actual purchase. What was it? How much was it? What does it look like? What does it feel like? What does it smell like?
So it's a 1940s bungalow, renovated, re-roofed, re-stumped, improvements across the inside and outside, just over 400 square meters of land. So a tiny little block. But with that type of property, I said location, it's walking distance into the CBD of Bendigo, the Bendigo markets. But interestingly enough, it's a very dynamic street. So this particular street, 2 doors down, has a property, just on the same sort of land, same sort of, dwelling that's quite old, but completely renovated. And what surprises me the most is the price gaps between properties on that street. So something in the same land, easily could sell for $590 to $620 based on those finishes. But then you've got the property I secured at $380K. So when you see that sort of region where you've got this demographic where they're just able to pay such extreme gaps in prices because they want to live there, high owner-occupied demand, that was quite appealing to me in terms of that, 1940s, good appeal location, purchased for around $380, and it's currently renting for $350 a week.
It's not too bad. And people understand what you mean by re-roofed, but you use the term re-stumped. What does restumping mean? Is this like when you look at investing in particular areas, if there's a lot of commonality in the properties, often if there is problems in one, there's problems in others where you might, traditionally there is a termite problem in a particular area because of the nature of the area, et cetera. So talking about Bendigo, restumping, that gives you a bit of an insight into what type of property you're buying. And imagine there's similar properties like that on the same street and in that whole area, developing in the 1940s, which is part of Bendigo sort of history. What does restumping mean and what do you look for in that regards?
Yeah, so basically, they've had an engineer in there and checked out some of the stumps. Basically,
what's a stump?
It's, I guess, the foundation holding up the dwelling underneath it all. So okay. You'll have...
So the bricks on the ground that holds up the beam, that holds up the roof, that holds up the building.
Yeah, so you've got basically, some dwellings you'll see in the eastern suburbs of Brisbane, you'll have, concrete posts or concrete steel posts. And then in this particular property, you have those, I guess, wooden stumps with, the steel cappings in some parts of it. And so I think, what really happens is they can obviously deteriorate over time. In some cases, termite damage. In some cases, just that age and sort of breaking down over time. And that whole bottom of the property, the foundation, was redone. And so that's a very extensive improvement there. Sometimes as low as 20, 30,000, as even upwards to many more tens of thousands, depending on what sort of works are going on. So parts of it redone in that scenario was a good plus for me, especially if you're going into a dwelling that's 60 to 70 years old.
Yeah, and you need to know the dynamics of each type of property or nuances of each type of property. So that's a smart play. And no matter where you're investing, there'll be something like that. So make sure you are informed and educated. Are you happy with the purchase? Did you find it, was it a risky purchase for you, or how did you sort of approach it to de-risk it as much as possible?
Yeah, so the de-risking part's very important. I mean, during this time, I think one uncertainty many investors have is that rent. And I don't blame them because, you've got borders shut around us. You've got different dynamics happening, people building houses. So when they're moving into something new, who's going to come and fill that gap? And so for me, we put together a bit of a checklist. And if anyone would like access to that, more than happy to share that checklist as well, Phil. But basically, the various indicators from a purchasing level as well as a rental level. Things like rent to income ratios, the proportion of owner occupiers in the region, the vacancy rate, listings that are on market for more than 21 days, looking out for those more stale listings, looking at inventory level of houses as well in terms of, okay, if there's, say, 120 sales that occurred in Kennington over the last 12 months, Phil, if there's 10 properties for sale now, that represents 1 month of inventory. And that 1 month of inventory means that if it's following normal sales volumes trajectories, all 10 properties need to sell for it to meet that 120. And that means there's a lot of speed that's going to occur and things are going to sell pretty quickly. But all of a sudden, if you've got 6 months of inventory, you've done 120 transactions over the last 12 months in a suburb, and you've got 60 hanging around, is that really going to be the safest market to invest in? So there's these due diligence points around the stale rentals, vacancy rates, the affordability of rentals, how many owner occupiers are there to keep that long-term ownership goal. So that was a big part of just avoiding disruption because when you're locked up in home and you're unsure of when work's going to open up, when you can travel around again during the middle of March and April, all these due diligence points, you have to double down on.
Yeah, and that's really good counsel for people who are looking to invest, irrespective of where you are in your investment journey. You've got to make sure that you are de-risked as much as possible, thinking 3, 4, 5 moves ahead. And we're in an environment right now which is really quite uncertain. A lot of people that don't actually know what's going on. So, you've got to play all the different angles and make sure you are prepared. Should there be changes or should there be potential disruption into the future? Arjun, we're going to take another break. We'll be back in a moment. Welcome back, everyone. Phil Tarrant, host of the Smart Property Investment Show with Arjun Paliwal, investor extraordinaire. That's what we'll call him. It's the third time on the show chatting about his journey investing in property, and this is the 11th installment of his investment journey, property number 11. You're a buy and hold strategy. You haven't sold anything, have you, Arjun, by memory?
No sales yet. Buy and hold for sure. And, following, I guess, just that long-term capital growth, time and age on that side, just trying to see where it takes me over time.
You're still relatively young. How old are you, mate?
28, heading into 29 next year. So, yeah, I think I'm inching closer to the 30.
Oh, mate, you're young. You've got plenty of time left and 11 properties before you're 30. Even if you stop now, no doubt you'd do pretty well out of it. So what's the future hold? Why are you investing in property? Do you want to drive a Ferrari one day? Is that the idea? Or you don't have such grand plans of grander driving around some red fast car?
Nah, look, I've never really been into the glitz and the glam. I think for me personally, like many people, that sort of freedom of time, choice, that's a big part, right? And I don't mean that to sit around and do nothing, because I've tried that before and it doesn't really work out too well. You get bored and you start, doing a lot of just excursions left, right, and center, and you realize, where's the day going? I think right now, purpose is really what it's all about, because the ability to build my portfolio, hopefully inspires others to do the same. And then when they have their own reasons, whether it be, driving the Ferrari for them, or whether it be, family time, getting on to work that is more purposeful for them. That's what it's really about, just heading to that goal of knowing that flexibility, freedom's there, building generational wealth and, giving back, because that was a big part of, I guess, my goals heading into, this sort of uncertain period. Giving back was a big part of what we did last year, and this new year ahead is going to be the same.
So we've spoken about this before, Arjun, and let's recap on it. Property number 11, what is next for you, and what will your portfolio look like in 5 years' time? And are you one of these people that run with this magic number of what retirement looks like and how much money you need, and therefore how big what sort of portfolio do you need at that point in time to achieve that? How do you frame all that sort of stuff?
Yeah, so my personal goals have been, a bit of a number-driven goal by the age of 30 is my sort of short-term one that my wife and I together are aiming for. At the moment, the portfolio's sort of sitting around 3.5 to 3.6 mil. And what we'd like to work towards is a $5 million portfolio by 30. And right now we've got a mix of residential, commercial across sort of, 4 states. And we want to push that diversity up to that 5th state and take it to, I think, Adelaide or the South Australian market is somewhere we haven't been into just yet. And why that's important to me is over the last few years, when I've seen so many different up and down movements in markets in different cities, I feel like you can protect yourself a lot more through just more diversity in that property market. Like when between 2017 and 19, Sydney had a bit of a funky time, and so did Melbourne. My properties in Tasmania moved up by, upwards of 30% just during that same time. So I find that just continuing to craft that towards that 5 million goal is what we'd like to do over the next 2 years, which might look like one property a year for the next sort of 2 years. And then from there, we can, really switch the efforts up from this huge acquisition to more just picking properties in the commercial space for high cash flow as time goes on, which is where I think we'll transition from just this buy and hold acquisition, trying to balance capital growth and cash flow, to a full-on cash flow play on the other side of 30 for the rest of our life. That's sort of what we're working towards.
And do you intend to hang up the investing boots at some point and sit back and relax on a beach drinking pina coladas? Is that anywhere on the horizon?
Doing it a couple of times here and there for the year is what I like it. If I do it one too many times, I think the missus will complain about how much weight I'm gaining. But for me, no, I think in terms of hanging up the investments, I genuinely, as an investor, whilst we've got goals to drive and towards and work towards, a part of me also is just so into the numbers, exploring different markets across the country, learning more about property. And there just isn't any better way in learning than practically doing it yourself. And so I think that if moving forward, I'm going to hang up the boots, it might be just such a big slowdown of acquisition that it's kind of the debt's retiring itself. Maybe instead of buying one every year or two, might be one every 5 or 10 years or 5 or 7 years.
How do you balance work with your own stuff now? Like you're in the buyer's agency game now, and we'll have a chat about that another time, but you're doing that all day, every day. Do you often forget to do your own stuff or your own wealth management, your own money management? How do you find a time to look after your personal stuff when you're always so busy sort of helping other people sort their stuff out? You
can just tell, I guess, by that last property I just purchased, it happened almost by accident. Like you do lose preparation. I think when you're helping so many others out all the time, you don't feel as prepared for those milestones that you're working towards for yourself. And you feel it almost happens by accident. Like you look at your bank account and you go, oh, okay, I've got something here. Or you look at, an event that comes up in life and you go, oh, I haven't done that. And so I think one loss that's definitely happening as a result of, having property both as a profession, passion, and then also personal habits in that space is you lose preparation personally because you're so prepared on that business and clients and so forth, for sure, Phil.
Nice one. Arjun, congratulations again, mate. Rising Star of the Year ROB Awards. You must be pretty happy about that accolade.
Oh, look, I'm very blessed, for sure.
It's a nice one. And thanks for your time. Next purchase, let's get you back in. You can tell us all about it if you're keen.
Looking forward to it, mate.
Nice one. Look forward to that. That's Arjun Paliwal. He's 3rd or 4th time now on the Smart Property Investment Show. So we like to keep connected, keep connected with our guests as they navigate their investment journey. It's good to see Arjun, like a lot of our repeat guests, moving in the right direction. Often what I find is that people are happy to come back if they're doing well. It's when people sort of blow all their dough and lose their way, they often don't want to talk about it. And that's the nature of property investment, but not here at Smart Property Investment. We like to tell these stories, warts and all. If you want to come and have a chat with us, please do, whether you've got no properties and you're thinking of buying, or one property and just started your journey all the way through to a large portfolio, come and share it. It's something that is really important to us and we're passionate about, is sharing this information. So we can have more informed property investors making better informed decisions. I remember smartpropertyinvestment.com.au is where you need to go to make sure you're better informed every single morning, afternoon. There's a whole bunch of information coming out. You can subscribe there as well to make sure that it lands in your inbox every single morning, smartpropertyinvestment.com.au/subscribe. Social media, Smart Property HQ is where you need to do it. Arjun, have you put a review yet on iTunes or the podcast app? Have you done a review yet for the Smart Property Investment Show?
I think on Spotify, if that's the one.
Okay. Well, I need you to talk to all your clients and ask them as well. I know they do listen to us. If they like what we're doing, I'd love to see those 5-star reviews coming through, and just a couple of remarks. As you know, Arjun, it's just not me here who sits behind the microphone. We've got a great team of people here who are passionate about creating these things, and they get a real kick out of it. We'll be back again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property, or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.
Propertyology regards right now as a very exciting time for investing in Australian real estate. There are some fantastic opportunities that Propertyology can help you take advantage of before buyers re-emerge from their coronavirus cocoons. Propertyology has a national focus. Now more than ever, experience and knowledge are the most valuable currency. Propertyology has that in spades. To find out how Propertyology's multi-award-winning buyers agents can help you prosper, contact them now at propertyology.com.au.